each and every time you see this kind of stuff, and you're seeing it again here now with the LBMA being a T plus 8 week delivery, it's supposed to be T plus 1 day. Um, these things are, as we said earlier, eroding confidence in the Western system. And at some point, I foresee, whether it be the exchange in Dubai, which is already, in terms of volume, maybe even surpassed the COMEX, or the Shanghai exchanges, who have been seeing massive delivery outflows. And those delivery outflows are being sold to the Chinese people. That's part of the strategy of the Chinese, is that they continue to suck gold in through the refiners and through the their own mining of it and whatnot, and then selling through copious deliveries through accumulation plans that the Chinese government has put forth to the people. And that's why Alistair would say, a couple of years ago, that they had 38,000 metric tons a few years ago, 20 by the state and 18 by the people. Those numbers have to be much higher now. But what I'm getting at is that we're, again, losing confidence in the exchanges, which that's kind of, what we're seeing is people want delivery now. They don't want cash settling, and they always did. But now you have a large consortium of folks that say, no, I want it. And if more and more confidence is eroded, you're going to see the exchanges lose significance altogether. And if they were to do it again, where you saw a squeeze on silver, as an example, which there's a 5 billion plus ounce shortfall, paper to physical, 5 billion by those banks in London. According to David Jensen, it was said between 4 and 6, so I'll take the middle ground, 5 billion, because it's an opaque market. It's over the counter. It's not transparent like the COMEX. Then that's a real problem if they were to reverse those trades and to make some of the commercial banks whole and tell everyone else they got screwed again. Fool me once, shame on you. Fool me twice, shame on me. You're beginning perhaps to see the Western exchanges being exposed for what they truly are, and that is a fractional reserve that has not reflected real price discovery on many of these commodities for a very long time, largely the precious metals. But yeah, I mean, I don't know how many times they would do that before it would start to just completely and totally be void of any real participation. I would argue that the big players that are standing for delivery have had this in mind all along, since you and I have been talking in 2020 about the others, which are the sovereign wealth funds, about the draining of the exchanges slowly, not just on COMEX and the LBMA, but from all around the world, even in Brazil, everywhere, because they don't all directly affect the price like COMEX and LBMA do. When you see things beginning to happen here, it becomes a lot more scary. It's interesting. I was, where did I put that? I was looking for signs. What would, I said, I put it in AI. I said, what would it look like if, I can find the damn thing. Here it is, I think. What would it look like if, could the market actually break? Could the market collapse? Could the LBMA break? And it said signs to watch for. Number one, widening divergence between paper and physical gold prices indicating delivery stress. Check. Number two, reports of delayed deliveries or contract settlements. Check. Unusual gold lease rate spikes. Check. Reflecting increased borrowing costs for physical gold. Check. Major disruptions in supply chains, including mining, refining, or transportation. Check. Banking sector instability affecting LBMA member banks or clearinghouses. That's the last one we haven't seen yet. So 5 of the 6 things that AI said would signal a failure on the LBMA are blaringly loud. So could it be that we're getting close? Maybe. I don't know. But yeah, that's why you see a scramble to get the real thing before that kind of thing happens. The whole system would blow up. I mean, because it would then realize that we've been lied to all along, and not just on that basic level. I mean, if they tell a lie that egregious for that long, then has everything else been a lie too? So God help us if it's not there. And I don't know. Maybe they're scurrying. I don't know. It would be a very big problem. Gold would go parabolic. But that's not all the gold they hold, too. I mean, they have to audit Fort Knox. They have to audit the New York Fed, maybe the West Point Mint. I don't know, because it's not all of the gold we hold. It's a lot of it, but not all of it. But it's a good place to start, and it's long overdue. Let's hope it's there. Most people in this industry for a long time has thought it wasn't there. But if he did a live stream and showed everyone and it really wasn't there, it would be very big problems. Gold would go to the moon immediately. I mean, it'll just shrink the number of dealers that have the ability to play in the market. Even to have accounts at primary distributors, you know, lines of credit and stuff, you have to have enough money, collateral money, in order to do this kind of stuff. It would certainly inhibit or prohibit small coin shops from doing much in the way of anything. Yeah, I mean, and hedging is what enables us to have a very large inventory and enables us to take that risk of buying back large portfolios. But you also have to have a lot of money and a big line of credit in order to do it, because you can't pay someone in 3 weeks when they deliver your metal to them. So it's becoming an industry where if you don't have enough money you have to have enough money to do the business and to keep product revolving in and out and to buy stuff back and to keep the game going. It's becoming a very expensive game. I remember, I've been doing this for a long time, where a tube of Gold Eagles was $500. At 252 ounce gold, it's just over $500 or 5,000 rather, excuse me, $5,000 for a tube of Gold Eagles, and now they're 60,000. It's beginning to add up very quickly. So yeah, what it would do is it would more or less blow up all the local coin shops, at least in their ability to buy or sell gold. Silver maybe, but it would just, the big 5 or 6 online companies, Miles Franklin, APMEX, Money Metals, SDJ, we'd all be able to continue to do things, but there would be a lot of smaller companies that would find it too challenging to provide customer service in a timely fashion when you're short on cash, and overextended in your line of credit is not an easy thing to do. Just to make a point about as prices go higher. So on a deal like this, where we're swapping bullion from clients into this, as far as the client concerned, there's basically no money exchanged. As far as you're concerned, there's basically no money exchanged, but the dealer had to buy these. And then when we're trading, we're getting back product and not money. And it's a balancing act. It's something that as price goes higher, if indeed it does, you'll find fewer and fewer and fewer companies out there have the ability to do creative things like this. It's something that I've always thought was very important. A swap from gold to silver, or silver to gold, or numismatics to bullion, or bullion to numismatics, if it is appropriate, is always really the best way to do something for the client. They don't have to spend money and they get put into a better position. I will tell you, in my career, I have never seen a better time to do this, not even within a country mile. So yeah, and the Liberties are my favorite. So there's plenty of them, even all the way up to 64 grade, which to me are a hell of a value right now, because they used to be way too expensive to buy in comparison to everything else. And usually it's 63 was the cutoff, and 64s would be wickedly high in price. To me, they're super intriguing. So best I've ever seen. Logarithmic decay just is basically, it's a theory it's like being on Niagara Falls, and you notice the pitch falling little by little by little by little, then bang all at once. You can during the Biden administration, almost everything I saw around me, I could make an analogy with logarithmic decay. But in terms of maybe the LBMA, for a long time now, we've seen little by little the draining of the exchanges, little by little, and it's accelerating. Now, heaven forbid we see that all at once moment where the whole thing blows up. But there are a lot of things that you can contribute, or you can draw that analogy between what's happening, with society, and like for example, in 2020, we started to see rumblings of censorship. and things you couldn't say or shouldn't say. And it got worse and worse and worse. And bang, now it's everywhere. And people were getting deplatformed, and they were getting, suspended from schools. And in the UK, they're arresting people for doing that. So, I mean, you could argue that whole phenomenon started out very slowly and then got more and more and more rapidly till it was everywhere in your face and part of just society, part of the fabric. Let's hope those kind of things reverse. But yeah, logarithmic decay, especially as it pertains to, you could say, the public's awareness and accumulation of metal, little by little by little, then bang, something happens and everyone wants it and it's too hard to get. So yeah, logarithmic decay explains a lot to me. And it's pervasive, and I think it will explain a lot in terms of the draining of the exchanges, the people in this country's understanding and acceptance of gold and silver as an important part of their portfolio. There will be an all-at-once awakening, and unfortunately that usually is associated with some sort of an event.